And I love to meet new traders and new people that I haven't talked to before. Now I have the pleasure of meeting Aksel Kibar. Aksel, very nice to meet you. You're muted. I can see if you unmute your mic. There you go.
There you go.
Nice to meet you, Aksel. I'm okay. Very nice to meet you, Aksel. I was looking forward to talking to you. And for people that may not be familiar with you, you're the founder of Tech Charts LLC. What a surprise, you're a technician, and research and trading firm. You're an educator, you're a mentor, and you teach classical charting principles. Let me ask you this. Do you remember a book called Technical Analysis of Stock Trends by Edwards and McGee? Or are you too young?
No, of course I remember, and I went and I bought the 5th edition, secondhand, and I got a really good price from Amazon. So I have it handy on my desk always.
That was my Bible in the 70s. I took it at my first course in technical analysis. That was the book the instructor told us to buy, and it's timeless. And yeah, I was wondering if that was maybe a foundation for your work. So
definitely, Richard Schabaker's and Edwards and McGee, which I will be discussing in the slides in a while.
Yeah,
and that book definitely is both of them are definitely a must read.
All right, before you get into your presentation, I'm always interested in how people ended up in the industry, what their life was looking at charts and trading. What was your story and your early journey like?
Yeah, so my involvement is 1999 when I started economics degree. So obviously the markets are booming. Tech bubble and so on, so somehow that reached to us as well, and I asked one day, so what are those stocks, how do we buy those things? And that's how I got involved. 1999 2000, which was the peak, and since then the crash happened. And during the crash, I was looking for an internship while I was working, while I was studying economics. So economics 101, rational expectations, efficient market hypothesis. And meanwhile, I'm looking at charts and I'm seeing irrationality and so on. So I said, this can't be the real deal. So I should really focus on something else that makes more sense. So then I started learning about technical analysis, and I had the chance.
Who were your influences in technical analysis? You have any?
Yeah, basically I had a mentor in Turkey, and I worked with him during my internship. He was a very kind gentleman, and internships are not that easy, but it was more like a mentorship for me. He basically taught me everything from scratch, from Elliott wave to indicators, and I ordered books from Amazon, and basically a lot of self-study happened. And when I finished, it was a 1.5 year long internship. When I was going to school, I was skipping some of the classes in the afternoon and going immediately to start the second half of the trading day. And it was a brokerage firm, so it was like the kitchen. You see every sentiment. It was the head office also. So we were receiving a lot of calls from different dealers, brokers, asking about opinions on different stocks. Wow. And then, so that's where I learned. And then when I went to Canada for my master's degree, again in economics, because there was no way for me to go into finance, because at least economics made more sense for me in terms of the behavioral side of things. So when I went to Canada, that's where I got my CMT degree. CMT exams, I passed them. The first two was basically after reading all the books over the years. I was able to sit down and pass those 2 levels. I don't know how difficult they are today, but I had to do a lot of reading. So basically, that's how I got involved in technical analysis, economics, and then my real test of experience was in the Middle East when I joined National Bank of Abu Dhabi, first as a technical analyst, and then started managing their trading fund, which was the biggest in the region, the largest fund in the region. Then I moved to the semi-sovereign fund, Abu Dhabi Investment Company, and then to Emirates Investment Company, EIIC. So basically, the test of my knowledge during that 10 years of UAE experience was put into the markets.
You really had a great journey. You know, can you imagine what people go through that try to get to point B with just the internet and trying to discern between what is real and what is fraud and everything else? You had a mentor, and that's a common theme I hear from professionals, is that they all had one key individual that really gave them a hand. And what's that expression? When the student is ready, the teacher appears. And sounds like you were fortunate in your journey, and then to end up managing a fund in Abu Dhabi. You have some guardian angels looking after your career, Aksel.
Yeah. So the key here is for new beginners is that keep pushing for it, because there were several times when rejections happened and interviews went bad, and I felt like the industry was pushing me away, and I kept on trying and trying to find the best way to apply my knowledge. So this will happen. Even today's market is more difficult with the job market, obviously, and the difficult condition. But keep trying and
great advice.
Learning, and the time will come. I'm sure that opportunity, the door will open up, and that opportunity.
It's kind of like trading, right? Trading, there's no, people say they have a secret to trading, and the secret is there is no secret. It's hard work and perseverance and living through adversity. And if that scares you, find something else to do.
Very true. Yeah.
Okay, so what do you have? You have anything prepared for us, or?
Yeah. So I have a presentation that I'll go through. Okay. So the aim of today's presentation is basically to highlight important concepts in classical charting and apply those on long-term equity and FX charts.
Okay, so great.
Let me start with sharing my screen, and then we can go through those slides. Share screen.
Green box. Drop down, got it.
Okay, this is visible, right?
Yep, we have it. Tech charts, demystifying the world of classical charting.
Yeah, okay. So let me move this video also to the top, or maybe even hide it. Okay. Okay, so as you mentioned, classical charting principles, the Bibles, technical analysis, and stock market profits. I really enjoyed this book as well. Richard Schabacher's, and the other book is Technical Analysis of Stock Trends, Edwards and McGee. Now,
the first one, I think, Aksel, the first one I think was written when, in 1932? The one by Schabacher, and then they modernized it, Edwards and McGee, in what, like in the 40s or 50s?
Yeah.
Okay, but the root of Edwards and McGee is Schabacher's work.
Yes.
Okay, great.
So technical analysis and use of charts are usually regarded as short-term timing tools. I disagree with this point of view. I think the use of charting with a slightly longer term perspective is more helpful for the professionals who are managing funds and portfolios with the help of fundamental analysis. Over this period of 10 years, when I was working with funds, I came across a lot of fundamental guys who are managing a large amount of money with a fundamental approach. And their always view was that technical analysis for short-term timing, where do we enter and where do we exit? But if you try to actually show the fundamental guys the long-term perspective of charts, where the asset allocation can happen, where the shifts are happening, it makes more sense. So when the trader or the idea generation happens like, okay, we bought it, now we have to exit here, it's a shocker for the fundamental guy because they already have a view on that market. So why do we exit? Why do we enter? So it's always better to provide the bigger picture to make more sense and to catch the bigger trends also. So that's why I think if we focus on the slightly longer term perspective, we get more attention and we are able to explain the basic principles of technical analysis and classical charting. As we started, it is important to note that classical chart patterns do not frequently form on price charts. Most of the time, price will not reveal a tradable and recognizable chart pattern. That is fine. Thanks to the hundreds and thousands of instruments available for trading, we can always move to a new chart for a well-defined chart pattern. So on this one, for example, you're seeing two charts. The chart on the left-hand side is the sugar futures. The chart on the right-hand side is a stock from New York Stock Exchange. One is John Wiley, the other one sugar futures. Do you see the similarities of these chart patterns? A year-long symmetrical triangle and a year-long symmetrical triangle on the left-hand side. So those
Beautiful.
chart patterns keep on forming on different instruments. Our job as the technician or the trader or the investor is to be able to identify those chart patterns as we step back and look at the price charts. Now, the more we force ourselves to identify chart patterns or patterns on price charts, the higher the failure rate. So those type of chart patterns usually pop up when you open the chart, when you look at the price chart. So that's how it's supposed to be. If we force our analysis on a specific instruments, at that point we're making probably a mistake. We should let the chart speak to us, not we wanting to get some information from the chart. Another thing I want to discuss is that trend periods are followed by consolidations and consolidations are followed by trend periods. Each consolidation will result in some sort of low volatility condition. It is that low volatility setup that usually gives way to a high volatility and strong trend period. So we want to capture those strong trend periods following those consolidations. So the idea actually here, when we're looking at classical chart patterns or some sort of consolidation, is basically to understand where the trend finishes and where the consolidation starts. Now, these are the 8 classical chart patterns that I'm focusing on. There are several others, but why am I focusing on these specific ones? Because they are mostly horizontal chart patterns with horizontal boundaries. It is very easy to, or common for a beginner technician, chartist to draw diagonal boundaries, connecting two lows and extending it to right, and then this trend line breaks down. We adjust that trend line again, and another trend line forms, and so on. So with horizontal boundaries, this doesn't happen. With horizontal boundaries, it is a clear line that we know that supply and demand exists. So ascending triangle, for example, the top one, is a horizontal chart pattern with the upper boundary clearly horizontal. The lower boundary gives its bullish bias because at every correction, at every pullback, buyers push the price higher. They are more impatient. They are not waiting for the previous low. They are coming and buying the stock or the instrument at a higher level. and then this at a higher level, eventually breakout takes place. The chart and the illustration next to it, cup with handle. Again, it's a horizontal chart pattern. This time, it's one less swing than the ascending triangle. Rectangle is one of my favorite because it's easy to identify on the price charts. So it's a sideways consolidation with several tests of chart pattern boundary. Descending triangle is the bearish version of the ascending triangle. Its bearish bias comes from the downward sloping trend line. So we have the sellers this time being impatient and selling at a lower high after every rebound. Head and shoulder top, all these, but goldies. Both head and shoulder top and head and shoulder bottom are the widely known chart patterns and the most talked about. So head and shoulder top is a bearish chart pattern. It's a reversal. Again, with those type of reversal chart patterns, head and shoulder top and head and shoulder bottom, I focus on the ones only with horizontal boundaries. So there can be a neckline that is sloping upwards or as a neckline that is sloping downwards, but I usually focus on the ones that have clear horizontal neckline. Then
can I interrupt you on that oh, you're getting to it right now. So you have come to believe, and I was always taught that it's a reversal formation. You're a believer that it can also be a continuation formation.
Yes.
And this is more modern, more of a modern interpretation, right?
There is actually in Edwards and McGee, this is discussed, head and shoulder continuation. Now,
I'm going to have to go back to it. Huh.
Yeah, the idea actually here is important. Then what name we are actually giving to those type of chart patterns. The idea here is that, so you have the first swing here, and then volatility picks up, okay, with the head. And then we have the volatility shrinking here, which forms a higher low. So that higher low is actually the preparation for a breakout higher.
I see. Okay,
so that's what we actually care. Now with cup with handle, volatility picks up during cup formation, and the handle is actually a higher low where the volatility is shrinking. And from that low volatility condition, you're getting the expansion in volatility and the breakout.
Okay, so vol is your cue about the validity of the formation.
Exactly. So you want to see several tests of the boundary, which I will be discussing in a couple of slides and following slides, and also the low volatility condition giving rise to a nice trend period. Now the other one, the only diagonal chart pattern that I focus on is the symmetrical triangle. This is a neutral chart pattern because both the buyers and sellers are pushing the price to a direction where there is indecision until there is a breakout. So symmetrical triangle can act as a bottom reversal, can act as a bullish continuation or bearish continuation chart pattern. So this is a neutral chart pattern, but again, we will discuss with different concepts.
Do you ever see breakdowns of going against a trend? You get a symmetrical triangle. Is it always a continuation formation?
No, symmetrical triangle can act as a reversal chart pattern as well.
Okay.
Yeah.
Thank you.
So here, breakouts from chart patterns with horizontal boundaries are reliable. Why? I like to focus on breakouts from horizontal boundaries. Now, the chart on the left-hand side, Dale, by the way, here is a nice head and shoulder continuation example. It's an equity. So you can see the horizontal boundary here, very clear.
Yes.
The breakout takes place after several tests of the chart pattern boundary. We see a nice consolidation and the continuation of the uptrend. So this is a 20-month long head and shoulder continuation. The chart on the right-hand side is a year-long symmetrical triangle in Volkswagen that is acting as a bottom reversal. Now, prior trend is clearly down, and then we start seeing this tight coil consolidation. Now, the problem with these type of diagonal chart patterns, chart patterns with diagonal boundaries, is that once there is a breakout, It's like the horses at the starting box. They have so much energy that when the door opens, you want them to run fast. But all of a sudden, you're putting a hurdle, the minor highs, where the resistances are. So before the trend develops, you're giving them hurdles. Whereas with the horizontal boundary breakouts, you're in most of the time you're in uncharted territory. You're clearing all the minor highs prior to that. So it's path of least resistance, I'm calling it. In this case,
and in your example on the left, you never even had a test of the breakout.
Exactly.
If you know, a lot of people wait for retests of breakouts. I've always said the best breakouts are the ones that don't retest, or maybe just once. But if you get multiple tests of a breakout, to be skeptical. Do you agree with that?
I agree with that. In fact, it was such a strong breakout to all-time highs that the consolidation only took place well above the chart pattern boundary here.
Right.
So basically the defense took place at a much higher level. Obviously, we see several breakouts that come and test the chart pattern boundary. These are hard retests, depends on the market condition and so on. But this was a breakout to all-time highs. So in the chart pattern on the right-hand side, the symmetrical triangle, you have the hurdle, the minor high. So that's a problem. That doesn't mean that the chart pattern will not succeed, but horizontals are more reliable. The next one is breakout to all-time highs. Chart setup above long-term averages. Now, I'm using the 200-day moving average on my charts as a trend filter. I want to see breakouts taking place above the long-term average, bullish ones, and the bearish ones below the moving average. So if you see, for example, a chart pattern like this, by the way, this is another stock, unlike the chart on the right-hand side we've just discussed a while ago, another head and shoulder continuation. This time it's a 2-year-long head and shoulder continuation. You see this left shoulder, head, the volatility increases, and then volatility starts shrinking. You see each low forming at a higher level. At this point, we are excited because the breakout is going to take place to all-time highs. And guess what? The breakout is going to take place above the long-term average. So we have 1, breakout to all-time highs possibility. 2, breakout is taking place above a long-term average. 3, we are breaking out from a horizontal chart pattern. So when these couple of things are lining up, you have a higher conviction in the trade idea. Several tests of chart pattern boundary. The more you test a chart pattern boundary, the more energy is built. It's like the earthquake. 10 years you haven't seen a breakout, 10 years you haven't seen an earthquake in an earthquake zone, chances are high the next one is going to be a bigger earthquake.
I'm in California, Aksel, so, you know, anyway.
Yeah.
We haven't had one in a while. All right, go ahead.
Sorry about that.
Well, you have them in Turkey too.
I've lived one in Turkey.
All right, yeah, go ahead.
1999.
Shake, rattle, and roll, buddy.
So you see several tests of chart pattern boundary. That's a good sign. The more tests, the better it is. So the breakouts that take place after several tests of chart pattern boundary are usually producing strong trends. After a 3-year-long consolidation, several tests, here the preparation and the breakout. Again, the chart on the right-hand side is a 5-year-long sideways consolidation. 1, 2, 3, 4, 5 tests, and the breakout takes place. Chart patterns in the context of broader price action. Now, what we're saying here is that when you're seeing a chart pattern on a price chart, look where it is forming. Is it after an advance? Is it after a decline? So we saw this rectangle here on the chart on the left-hand side, and we start saying that, okay, fine. So we are in a downtrend, and this can actually act like a continuation, a bearish continuation. But the price is moving higher. Does that mean that this rectangle will not succeed? No, it will succeed, but remind yourself that this is trying to reverse an existing downtrend, so it can be more choppy. as in this example. So even though there is a breakout from a rectangle, we chopped around the chart pattern boundary.
Well, we actually negated the breakout there. How do you handle that?
Yeah, if you're using wider stops, you will be okay. If you're using tighter stops, you will get stopped out, and then there is the second try.
You have to recommit.
Yeah.
You have to know when to recommit if you're taken out.
Exactly. So the second time the breakout renews its strength is the chance that you can give it another try on the chart pattern. The chart on the right-hand side has already momentum. So the first buying happened in this stock. And then we entered into a consolidation, the rectangle. Now we're trying to break out, so you have higher conviction that this can run this time. Because the first accumulation phase is over. The rectangle finished, the consolidation. Now it can be a stronger trend, which actually took place following that breakout compared to the previous one. So chart patterns in the context of broader price action. This is what I'm calling it. Now, this is an interesting concept, launching pattern. Identification of a launching pattern. Now, of course, my late mentor, Peter Brandt, his books are a gem, and I have basically memorized both of his books. And this is his concept, the launching pattern. What does this mean?
What do you mean late?
Since 2014, I get the chance to meet Peter Brandt, and I've attended one of their traders get-together.
Okay.
So our friendship.
He's still around, though. He's still around. He's still around.
Yes,
right?
Of course.
Okay.
My first mentor in Turkey, and then my second mentor, Peter Brandt, talks about the launching pattern.
Okay.
So what does this mean? And I've seen several examples of those on price charts. So what do we have here is a cup with handle, and the handle part forms as a separate chart pattern. So this is a 6-month-long symmetrical triangle acting as a launching pattern, completing at the same time. So you have two chart patterns completing at the same time, cup with handle and the symmetrical triangle. Now let's look at this one, 15-month-long cup with handle. The handle part is a 4-month-long rectangle acting as a launching pattern.
Can I make one point here?
Sure.
Okay, so on this pattern you have to the left, that's a breakaway gap, right, Aksel?
This one, yes.
Yeah, okay, so you know, a lot of FX traders, they have this thing in their head, all gaps are filled. And after you'd have a gap higher opening, a lot of people would try and short it looking for the gap fill. I tell them there are different types of gaps. There are area gaps, there are runaway gaps, and breakaway gaps. And if you're waiting for that gap to be filled, who knows if it ever was, and you're broke if it does after that anyway. So all gaps are not filled, are
Exactly.
they? Okay.
Exactly.
Thank
you.
So
the chart on the right-hand side, this time, the 5-year-long sideways consolidation, the last part was a 16-month-long rectangle that acted as a launching pattern. So when we see those two chart patterns forming around the same area, that's a high conviction setup. Long-term chart patterns will launch strong uptrends. The chart on the left-hand side, dollar Turkish lira, again, head and shoulder continuation, prior trend since 1990s coming to this point, left shoulder, head, right shoulder, horizontal boundary, several tests, the breakout, a minor consolidation here. When I say minor, it was several months long, but a very tight range. As you can see, this is very low volatility setup. It was just the right time to basically initiate long positions, and obviously this followed.
Still hasn't looked back.
Still hasn't looked back. The chart on the right-hand side, again, the longer the consolidation, the stronger the trend that follows. A decisive breakout is usually more reliable. This is the price chart of Logitech. So we see an ascending triangle here, the monthly scale. When we see a strong breakout, it's usually difficult for traders to jump on board and they say usually it's too late, or let me wait for a pullback. But usually those strong breakouts produce the strong trends, because that shows big funds buying into the stock. So you better position yourself on a strong breakout than a weak breakout. Strong breakouts, again, a decisive move, usually is followed by a strong trend. Breakout above more than one technical resistance. So we have a year-long symmetrical triangle here forming as a reversal, and we have a trend line at the same level. If you're breaking above more than one technical level, that's better than breaking above one technical level. So that's another concept.
It's like Confluence.
Yes. Here we have, again, another example, the Oracle price chart. This was a downtrend. Breakout takes place above the downtrend, and then the rectangle breakout takes place. So higher conviction. You have two technical levels already completed, already breached on the upside, so you have higher conviction. Breakout above more than one technical resistance. Again, another example here, the symmetrical triangle and the downtrend completing at the same time on the upside. This was Baidu price chart. Now let's move to some more exciting current examples. Again, we're going to apply what we have seen, the classical chart patterns, on the price charts of long-term FX charts. Now, widely discussed and talked about US dollar index. Symmetrical triangle, this is what I see it as. Prior to that, a rectangle. The breakout takes place, and this is not that clear, but possibly a head and shoulder continuation that completed on the upside. Now, when we look at the price chart on the right-hand side here, this symmetrical triangle completed with a rectangle, launching pattern, and symmetrical triangle breakout at the same time, followed by a consolidation. Now, I'm seeing similarities between what is forming here and what has formed here.
It's like a fractal.
Like a fractal, exactly. So the left shoulder, it's taking a little bit longer. It's a larger scale. But this low of the shoulder, and then violating that previous high here, violation of the previous high, and then selling off to form the head, here forming the head, and then for the right shoulder, a rally to form the completing the head, a rally, and then the right shoulder. Now, it's going to be interesting because on the monthly scale, if this month finishes strong, we have a bullish engulfing candlestick that can signal a nice reversal on the monthly scale.
Would you buy it there, or do you have to wait for the breakout of the head and shoulders continuation formation?
Well, usually FX is a more strategic position for me. And so it's more than a trading position. I allocate funds to basically dollar or euro because of my where I'm living. And I can say that I've been, maybe my views are biased because I'm fully long right now, US dollar. Now, there are different ways of trading the head and shoulder. You can buy it at the formation of the shoulder, given that now you have the bullish engulfing candlestick supporting, because the low of the shoulder can extend to 90, we don't know. But this bullish engulfing can add a little bit more perspective to the possibility of a rebound. So that being said, with a stop below the bullish engulfing, initial position, and then the breakout above the second layer. If there is a pullback, third layer. So there are different ways of scaling in with classical chart patterns.
Okay, thank you.
The next chart is dollar, Singapore dollar, US dollar versus Singapore dollar. Now, what do we have here? Ascending triangle. At the end of a trend, ascending triangle acted as a reversal. Do you see the horizontal boundary?
Yes.
A clear one. And the lower boundary is an upward sloping. So it shows that the buyers are becoming more impatient. And this low is not even reaching the lower boundary. So here, this breakout, the decisive breakout, is the signal. Now let's move here, the symmetrical triangle. It's a clear consolidation that broke out on the upside. So this was a reversal signal. Now what we have here is a better defined head and shoulder continuation than the dollar index, with the horizontal boundary being at 144. If we see a rally towards 144, chances are high that 2021, 2022 would be an uptrend for the US dollar against the Singapore dollar.
Great luck.
Now this chart, as I said, classical chart patterns do not appear always on price chart, so we shouldn't force our analysis on the price chart, but rather if we see a classical chart pattern, we take that opportunity as a trade idea or an investment idea. Here, for studying purposes, again, symmetrical triangle acted as a bottom reversal in 2001, 2002 after a clear downtrend. The breakout take place at the same time when we cleared the trend channel. So as you can see, there are times when you see when you see chart patterns, and there are times that there is no recognizable chart pattern on the price charts. It's more like random. So during those times, leave that chart alone. Focus on the other opportunities you have in your opportunity set. Now, this is going to be, I think, the most important chart. Why am I saying that? This is dollar Japanese yen. Why am I saying this? Just because of the historical low volatility condition that we're experiencing on this price chart. This is the, again, monthly scale price, and the way the dollar yen cross rate has been consolidating in such a tight range tells me that a strong breakout is due. And if this takes place on the upside, I'm not giving direction yet because symmetrical triangle is a neutral chart pattern, but I'm also seeing the possibility of a head and shoulder bottom here with the right shoulder being as a symmetrical triangle, launching pattern. So if this thing breaks out on the upside, quickly we will find ourselves at 125. But the actual price action, I think, will start after we complete that head and shoulder bottom, if it takes place. So step by step, we will see. But what I'm watching are those two tight chart pattern boundaries for a decisive breakout. Now you can see that this bottom reversal also formed as a small head and shoulder. So shoulder, head, shoulder, that acted as a reversal inside the big chart pattern.
Yeah, when you look at that, it's been doing nothing for 7 years except developing the, whatever it's developing, the symmetrical triangle.
Yes. So usually from those low volatility conditions, strong breakouts, strong trend periods emerge.
Okay.
The next chart is euro dollar. What do we have here? First of all, we have a clear downward trend channel that has been tested on the upside several times, and the last time we touched 120, 119 area was actually the upper boundary of that trend channel. Now, I had doubts that this trend channel might be valid or not, but given that we have reversed from there, now I'm a little bit more convinced that if we break above 120, it's a change of plans basically. Euro gains strength, dollar loses against major currencies. But if we go and test the lower boundary, the widely discussed parity might start becoming a topic again for the euro dollar.
Okay, here, we have to wrap up in a minute or two, Aksel.
Sure.
Aksel, unfortunately, time is pressing. We need to wrap it up.
Sure. We have few more slides and I will wrap up.
Go ahead. Go ahead.
So the next chart is dollar Mexican peso. Now we move to the emerging market currencies, and you can see that dollar has been gaining against the emerging market currencies as well. A clear symmetrical triangle followed by another symmetrical triangle breakout, pullback. Now probably we have a continuation. The next chart is the Brazilian real. So here
Wow.
we had a huge double bottom. Inside the double bottom, this was a clear head and shoulder bottom. Rectangle here acted as a launching pattern. We reached to 2002 highs. We formed this nice cup with handle and broke out to all-time highs. Now you can see that dollar is also gaining against Brazilian real. Emerging market currencies are weak. This one is South African rand. You can see this cup with handle here, how the low volatility conditions set up for this long-term breakout, the symmetrical triangle, and the cup with handle, the recent one, which broke out with a decisive candle, pulled back, and now probably we're due for a rebound. The next chart is the Russian ruble. Now the Russian ruble hasn't broken out yet, but it has formed a several-year-long ascending triangle with this clear horizontal boundary at 80.5. So the breakout can easily take us to 110 and all-time highs. So this is a very clear chart. You can see that the buyers have been pushing it higher every time the price corrected. The next chart, dollar Indian rupee, a clear cup with handle completed. We have a clear uptrend. So Indian rupee, unlike the other emerging market currencies, stayed a little bit stronger, but still is losing against the US dollar. Even with this latest US dollar correction, emerging market currencies are weak. Now, guess what? We can also apply it on frontier market currencies. This is dollar Kenyan shilling. Classical chart patterns appear also on those price charts. The left shoulder, head, right shoulder, strong breakout, pulled back, ascending triangle here, and then now the rectangle is breaking out on the upside. So this also, the African currency for African funds, should be careful with holding assets in Kenyan shilling stocks. If you want to contact me, Aksel@techcharts.net. Any kind of questions regarding membership, Jolene@techcharts.net. Thanks for everyone for joining, and I hope this has been a valuable presentation.
It has been, so you don't have to hope.
It was great.
Thank you, Aksel. Thank you.
And really, I love the clean look of your charts, and so you trade naked. Just make sure you keep the curtains drawn. Okay.
Thank
Aksel?
you.
All right. Anyway, so what a beautiful classic charting presentation by Aksel.